Sam, welcome to the show, man. How are you?
I'm good. Good. How are you?
Doing well. I just asked you before the show how Hong Kong is doing because, usually, 3 months ago, there was protests in Hong Kong, or I don't know how many months ago, there was protests in Hong Kong. I'm watching my timeline. Man, that looks crazy. Now the tables have turned. All the crazy protests are happening on my soil. What's going on in Hong Kong?
Hong Kong's pretty chill, especially relative to other places that my friends are living. We haven't had a new case of COVID in weeks, and which we do have protests still, but I think they're probably even chiller than a lot of the U.S.'s. Hong Kong's a pretty good place to be right now.
Yeah. Where were you? Actually, to give a little bit of context, and before we dive into the topics that I want to talk about, I think this will help both of those areas. What's the best way that you would describe what Alameda Research even does, and then your role there? Because I had Sam Bankman-Fried on the show a while back, and I think some people have these big ideas about what Alameda does, where they say it's a market maker, they say it's a quant trading firm, and all those ideas maybe get mixed together. Before we dive into the topics, and also so people get some background on you, what's the best way to describe Alameda and what you do?
Sure. So Alameda Research at its heart is a quantitative trading firm. We're trading a ton of volume on every liquid product on every real exchange in the crypto space. So to do that, we have our systems are primarily automated with a ton of human intervention 24/7. We basically build and spend a lot of time optimizing these bots that do all of our trading on all of the liquid products on every crypto exchange. And a big part of that is the market making part of our business that you mentioned. What that means is that we constantly have markets out and we're always quoting on all of these exchanges. And we do that for a variety of reasons. In some cases, it's to build relationships with the exchanges. For instance, we'll get better fees if we're constantly market making. We might get better access to data and other random benefits. Always making in all the markets also gives you access to lots of information. Often the private data from the exchanges is fast and the public data is slow. And so you might get better price information by doing that. Mm-hmm. As well as, we'll probably talk about this later, but for instance, on BitMEX, if you have orders out all the time, then you might have access to some of the best prints that happen with more frequency than you might think. Mm-hmm. So that's sort of what the market making half of our business is. In terms of what I do, all of our traders here are tend to be pretty quantitative in their backgrounds. So I'll be, depending on whether it's slow or busy on a given day, I might be working on studies, trying to optimize our bots, look for new trading opportunities and things like that. If it's really busy, then I might be making fast real-time decisions about where should our capital be, what trades should we put on, should we be buying or selling, things like that. And then personally, I also do a lot of risk management for the company in terms of thinking about how big our positions can be without sacrificing a lot of the value of them because we might get liquidated or something.
Sure.
As well as thinking about where our capital should be and sort of a higher level strategy decisions like that.
Cool. How'd you end up there? Where were you trading before? Were you a quant trader somewhere else? Is that kind of the background, and then you linked up with Sam, or what was the path?
Yeah. So to get a full picture of how I ended up here probably requires going back to high school, actually.
High level.
I actually knew Sam from high school.
Oh my gosh.
We went to the same math camp during high school. We were both pretty into math back then.
That's insane.
And then we also both ended up going to MIT studying math. Actually, he studied physics, but that's similar to math.
Yeah.
And then we both ended up doing quant trading afterward. Personally, I did a trading internship at SIG, and then ended up going back there full time, where I was a trader on their bond ETF desk, and also I worked on their sports betting desk for a bit as well. I left there in 2017. Actually took I was working on a sort of unrelated project for about a year, And during that time, I actually started trading crypto in my PA. And that was so immediately profitable that I sort of recognized that like just by spending like a few hours a week on it, it was like so clear there were great opportunities in it that I realized I kind of had to focus on this full time. And I knew Sam was doing this, and yeah, so I got back in touch with him and ended up here.
That's so wild, going all the way back to high school. I've heard, I kind of expected that you've traded other assets, and I can see, it's pretty traditional math or physics background. Eventually, you end up kind of at a quant desk. I wouldn't have guessed though that you would have been on the sports betting side at SIG. Is that still a book? Do they still trade that?
Yeah, so they were just getting started around the time I left. They were starting up a sports betting desk in Ireland to bet to bet on the various sports betting websites that are
Yeah.
legal in Europe. Yeah, we were like building models to try and predict the outcomes of football games before, like during the games, before other people could. It was pretty cool, actually.
Yeah, it's fascinating.
Yeah, it sounds pretty different from like trading in the markets or whatever, but it turns out to be like pretty analogous.
Yeah. Yeah, there's so many stories that better way back in Hong Kong that made almost $1 billion betting on horses. But
Yeah.
the only news stories that I've seen in recent years are books that try to transition or desks that try to transition to betting sports, and then they all kind of flop or fail. So
Sure.
yeah,
Yeah, it wasn't. It was. They always. They're still doing it. I actually am no longer privy to what's going on there,
yeah, yeah,
but I know it still exists. Um, yeah, they founded it as not as like planning to transition or anything, but as like a high upside, a high chance of failure
sure,
venture. But I think it's going pretty well. It's definitely something that SIG is pretty well suited for.
yep. All right, pretty interesting. Well, Sam, now that I do have you here, you're probably one of the best people to hear from on this. I'm pretty excited to be able to ask you some of these questions, and then at the end, I proposed on Twitter that they could ask you some questions. Some of them that came in we won't be talking about. Some that came in I thought were actually pretty good. But first, just kind of setting the stage, Bitcoin's been grinding up since that crash back in March. It's been a rather consistent ride up. Sure, we've had dips, but it kind of changed last week, and your name popped up on my Twitter feed last week. You were about to give a talk at Masari's mainnet event, and it was about leveraged trading, kind of the market dynamic there, what that creates, what it leads to with Bitcoin, and how Bitcoin's a little bit unique in that sense. On June 2nd, I think it was right when you were going to give your talk, Bitcoin, cruising along, been doing what it's doing. All of a sudden, it rips from like 98 to 10.5K in a matter of minutes. You had a whole thread. What the hell happened there?
Yeah. Yeah. So that was that was an interesting one. The start of that, it seemed, was fairly organic in that it looked like someone was actually just trying to buy a lot of Bitcoin, specifically on the BitMEX perpetual Bitcoin market. And they were just continually stepping up their bid. It got pretty aggressive. You could sort of tell that it was a very aggressive buyer because the BitMEX perps were trading at a very high premium relative to other markets, which sort of gives you a hint of like the ratio of buyers to sellers in that market versus in other markets at that time. And so yeah, the premium was really high, and you could also just watch the order book, and this person was just stepping up their bid over and over again. That would be fine in a normal market, and that's pretty normal. But what happens in crypto and on BitMEX in particular is that what this can sort of dislodge the market in certain ways, because if you suppose that there are people who are leveraged short on the market, it can trigger their liquidation price can get triggered if Bitcoin gets high enough, which can trigger a cascading set of liquidations up.
Sure.
So we go from having some organic price action from a buyer to price action that just keeps going up because of liquidations. In this case, it's not clear what the mix was, but the person who was buying it really aggressively also seemed to be putting on a large position, and likely with high leverage. And yeah, so they drove this combination of effects drove Bitcoin up above to 10.4 or something. And so what happens next is it's fairly likely that when Bitcoin gets above a round number, especially a really round number like 10K, there's going to be some resistance there. And in this case, there was. Like there were people who were willing to sell it when it got significantly above 10K. So what that did is drove the price back down a few $100s to like 10-1 or something. I forget what the price was that actually started triggering this, but the fact that this really aggressive buyer was likely really high levered ended up triggering the opposite effect of liquidating that person.
Yeah.
And they were you were watching on the book, despite the fact that there were liquidations driving the price up, the open interest on the order book or on that product was like just skyrocketing during this period. So whoever was doing this was putting on a huge levered position. And what that allowed to happen when the price got back down is that their position started getting liquidated, and this is into a book with like no liquidity at all on the buy side left, just because it was like shooting it down 10% where there weren't enough buyers to support it.
Sure.
And yeah, so immediately the price got back down to like, I believe that its very bottom was like 87 or something. People bought it back up, of course, because the other markets didn't get that low. But yeah, so these lever positions were what allowed it to get as high as it did, and then were what forced it to like have the dumb price movement, like going immediately back down 15%. Yeah, so it was pretty cool.
Yeah, it was certainly cool. I mean, obviously not for the people who were attacking on leverage to the top, but
Yeah.
you were right. That downside move happened right around 10-1. You're correct there. But the two things that interest me most, or I think I'm kind of still left thinking about with this move that we don't see happen a lot, is it seems like both sides got punished, right? Usually when there's a sharp move for Bitcoin, either shorts were continually shorting a level, we eventually break through, momentum traders jump on that, retail starts foaming into that, and you just see shorts for the entire day on your Twitter feed or whatever feed you like to watch. You see shorts getting liquidated, right? One side wins. This time, I mean, both sides got crushed. What is that like? What leads to that? What kind of insight do you have there?
Yeah, so the more traditional thing that would have happened here is, like you said, the buying would have forced the price up. That would have triggered sell side liquidations or buy side liquidations, from shorts that just kept jettisoning the price up, and that would have just been sort of the end of it. The reason that in this case both happened is that the people who were buying were putting on super lever positions. BitMEX allows up to 100x leverage. It wouldn't surprise me if they were using something like that, just based on where the liquidations happened.
Yeah.
And B, I think they weren't factoring in the idea that there would be a good amount of natural selling that would happen as Bitcoin got above 10K, and especially like significantly above 10K. It's not like a guarantee or anything. It's hard to predict these things, but I would say that there's at least like a strong chance that there'd be some initial selling pressure after Bitcoin gets above 10K. And it doesn't even have to be permanent. There could be more buyers behind as well. But the fact that there was any selling pressure means that there's some chance for the price to get back down below X, where X is the buying liquidations will start. And so, yeah, I think the main effect here that allowed it to go both ways is that the buyers were super levered too, which doesn't always happen.
So taking that into account, the other thing you brought up in your thread was, and you mentioned this a second ago, the move up was from organic buyers. How do you determine that, right? Because I look at that move, or I see people on YouTube or Twitter, wherever it is, and they start saying, this was one large whale. He manipulated the market up, and he moves it right back down, so we all get liquidated, right? It's maybe that's a trader who got liquidated that feels like that, or maybe that's just collectively a mistrust in how ridiculous these moves are. How do you kind of view what's organic versus what looks like that looks a little bit fishy?
Sure. Yeah, so I sort of discount the idea that it was likely to be a whale who was moving the price up with the plan of liquidating other people, just because it was so clear that whoever it was did get liquidated themselves. And it's finding a narrative where that made sense for them is kind of hard. It's pretty unlikely they made money off this. So it's unlikely that's what happened. I call the buying itself organic, sort of in contrast with those things where you see like someone who posts giant bids and then cancels them over and over again with the likely goal of trying to move the price up so they can sell higher or something like that. It's so I'm trying to contrast it with that sort of price action because it was clear that didn't happen in this case. If you were watching the order books, you could see someone with big bids stepping them up and getting filled and continuing to step up even though they were getting filled, which suggests that they were actually trying to buy and they succeeded.
Okay, makes sense. That's good to differentiate then. I think that'll help people going forward too. All right, so now that we're in this environment, we have some of these crazy moves happening. I think the next thing that's on traders' minds as you look across how exchanges are handling this is on that move we're still talking about, and I promise we're going to go to more current and some bigger conceptual questions next. But this move was just so interesting. BitMEX moved all the way down to 8,600 was the low. I think Bybit and FTX and other exchanges only printed down to like 92, 93. Obviously, BitMEX bought back up on that, right? It's inefficient. But why is BitMEX printing so low? There's an argument on Twitter. One side saying it's because there's that much open interest, right? It makes sense. They have to liquidate all those positions. At the same side, other people are saying, BitMEX is the worst exchange. You shouldn't trade there. Like, why is BitMEX now giving the nastiest wicks as traders try to navigate this market?
Yeah. So on some level, it's not exactly related to how BitMEX itself works. It's more related to how people use it. Or at least I'm pretty confident about that. Like if for instance the users on BitMEX are on average just levered way higher than on other places, there's just going to be more liquidations there.
Yeah.
And in particular, bigger liquidations and bigger relative to the size of the orders that are on their order book. Their order book's completely public all the time, so you can see how much is bid or offered, like 2 or 10% away or whatever you want to look at, and so you can sort of. And so if there's going to be like a $10 million liquidation on BitMEX, you can, or on Bybit or on FTX or wherever, you can sort of tell exactly how far down it's going to print. And BitMEX, I don't think is like super abnormal in how much, in like the size of their open orders at any given time. But if their users are putting on higher leverage positions and bigger ones in particular than elsewhere, then you might expect that there'll be bigger wicks. And that's not exactly BitMEX's fault. And I think that's basically what's happening.
So it's a weird contrast of BitMEX having the highest volume. It has for some time. It's been around the longest. Most people recognize it. Probably have a larger trading pool than even some exchanges that might be growing faster than it. So it has the highest volume. Oftentimes it's the most liquid, but it's also having the largest wicks. And you say that's probably because it's really just how traders are using that platform.
Yeah, that's what I would think. I think that if 100x leverage positions are like 4 times more popular on BitMEX than on every other exchange, that sort of explains everything.
I see.
Yeah, like if they have more liquidations, which is like a result of user behavior, then like this sort of thing is just going to happen. It surprises me that it keeps happening, just because I did like. People should sort of see that this is going to happen and that it means that their 100x leverage positions are pretty negative expected value, but it keeps happening. So
it's like a culture there. It's like you log into BitMEX and 100x. I don't know what it is. Man, that's wild. Yeah. What's the average leverage at FTX? Are you able to share that? Because I know Arthur, I think a while back said average leverage was like 8x. I think that was the last public figure he gave. I've lower on FTX.
6 and 8. For FTX, I'm not sure if we've made that public,
okay.
I shouldn't say we. Strictly speaking, I do not work for FTX, and I don't have any private information about FTX that other users don't have. So if it's not been made public, then I don't think it has, then I wouldn't know.
Okay, cool. That was one of the Twitter questions, but it kind of fit in there nicely. Well, all right. That also explains something that'll give the people on Twitter who fight about whether BitMEX is the best some more to chew on. One more thing, with these wicks clearing open interest, and this isn't for right now. I mean, we just had this action kind of today. Really, these moves have been nonstop. Both sides have been getting punished for almost a week. Bitcoin can't pick direction above 10K or below 10K. When these wicks happen and they clear open interest, so either the shorts get hurt or the longs get hurt, whatever it might be, does that usually, or does that generally indicate, something to you? Does that generally indicate a trend's going to happen? The reason I'm asking, there was a report last year, Delphi Digital came out with a report, and they were looking at whenever open interest got over $1 billion, it led to negative returns for the next, what was like a month, 2 months, 3 months, whatever it might be. So it's kind of showing when the market gets too levered up, we kind of have to clear some of those and then we can move higher. Is there still a phenomenon like that exists? Because that kind of went away a little bit.
Yeah. I think there is an effect that's related to that, but I don't think it's exactly if open interest gets really high, then Bitcoin will go down, for instance.
Mm-hmm.
I think it more indicates a trend of mean reversion. So if, for instance, Bitcoin goes up a lot during a period when open interest goes up a lot as well, then what that likely indicates, not always, but it's pretty likely, is that a high fraction of the people who are buying that caused Bitcoin to go up were opening these levered positions, and if there's if there's any reversion back down, that can trigger these liquidations that make it go a lot back down, so that's just sort of so it can. If Bitcoin went up during the period when open interest went up, it can mean Bitcoin is more apt to go down than up after that. But the opposite is true as well. So if Bitcoin's going down when open interest is going up, then Bitcoin probably has some propensity to revert back to its mean if there's like any recovery at all.
All right, that makes sense. I remember when that phenomenon was going away. I didn't know if it was because more people were realizing that and now trying to get ahead of that trade, or if it was just because we'd only seen an uptrend, open interest to get that high, people were getting levered as we were at the end of the uptrend. I don't know what it was, but either way, it seemed to have gone away.
Yeah, and I think that people do see that open interest going up means Bitcoin going down, mostly because Bitcoin has usually gone up over the past 5 years or whatever. But if we get into a more up and down regime, then we'll probably see both of those.
Okay. Man, it's just been so wild to watch these past 7 days. It seems like a ton is happening if you're trading it. For investors, I imagine it's pretty slow. It leads me to a question. This is something I proposed on Twitter. I said trading is good for Bitcoin. Do you think trading is good for Bitcoin? Because I think that a lot of people, maybe even people listening, have been watching this action. We get up above 10K, and now people are getting frustrated. They're like, we can't hold it. We're seeing these wicks. It's all because of margin. It's all because of trading, right? Is trading a net positive for Bitcoin?
Yeah, I mean, I think that there are there are benefits and there are negatives as well. For instance, if there weren't a ton of people trading Bitcoin, then we would have way less of an idea what Bitcoin is worth. Just because, if, for instance, 1% of the current people who have expressed an opinion about Bitcoin's price had done so instead, then it's really likely that if once those other 99% express their opinion, it might differ a ton from what the crowd currently thinks. So maybe we would think Bitcoin's worth $500, but there's a ton of people who would buy it up to 10K. So price discovery is something that we do get from people trading it a lot. And for all of the volatility between 9 and 10K we've been seeing, it's not getting outside that range. And it hasn't gotten outside a range from 4 to 13K in a while now. And that is a wide range, but it's not as wide as it would be if people weren't trading it as much as they are. And without that, without having some idea of what Bitcoin's worth, even if it's a pretty wide idea, it can't really become something people use as a real currency or whatever, because it would just have way too much propensity to have even higher volatility.
Everyone's estimates would vary so much, we would almost have more kind of ridiculous moves, right? That's the way I think of it. It's we would have, if no one was trading it, and you wanted to go in and buy, you'd be moving up the price maybe 2x, depending on how big your buy is, or when you wanted to get out. So,
yeah, and it's also sort of a false dichotomy because if you imagine that Bitcoin is used as a real commodity that people buy stuff with or whatever, and it became really popular, this would have to be trading markets. Just because if people do disagree about it, and enough people disagree about it, you're going to incentivize people to set up exchanges to capitalize on that, and it's just sort of impossible to not have markets unless unless there's some sort of inherent value that people can assign to it and all agree on, which I think we know is not true with Bitcoin.
It's always going to be tough. All right, one more along those same lines. This one also came from Twitter, but it kind of fits this format. Is high leverage trading net good for Bitcoin? Because some people say, okay, that's good. It's trading, right? It needs to be liquid. It helps people get in and out. We can understand what it's worth today, what we think it's worth in the future. But is high leverage kind of destroying Bitcoin at its core?
Right. So one thing that high leverage gets you is the ability to size up your the strength of the opinion you're saying about the price of Bitcoin, which in theory should lead to faster price discovery and eventually more efficient markets. In practice, obviously, it leads to a ton of liquidations and like unnatural price movement that has nothing to do with what anyone thinks Bitcoin is worth. And so I think that it's fairly likely that it's a net negative right now. But there exist systems that include it that I think would be fairly ideal, but I don't think we're there yet.
Is it so? It's probably a size thing. Once Bitcoin reaches a certain size, or once it's liquid enough, it won't have as much of a negative effect. Do you think?
Yeah, and also if volatility were to go down, I think it would have a way less negative effect as well, which is sort of like a self-fulfilling thing. Like obviously the high leverage contributes to the high volatility, but if volatility were lower, then these high leverage positions would get liquidated less.
Sure.
And yeah, it would be better.
Makes me think back to the last time I spoke to Arthur at the end of our episode, and he said, "Look, if leverage goes down, we could just up the leverage 200x." He said, "I'll up the leverage," or he said, "If volatility goes down, I'll up the leverage." Oh man, who knows if we end up there? What about leverage for altcoins? This is something that FTX offers. This is something that Binance has been working on, and as alts are actually doing quite well for the past couple of months, there's a question, being thrown around. I've been thinking about it too. Does leverage hurt alt's chance ability to do well? How do you think about the dynamic there? Because altcoins trading way smaller than Bitcoin, so it's a little bit different, the role that leverage can have on those things.
Sure. I would say it's pretty analogous. The key difference is that the altcoin markets are significantly less liquid than Bitcoin is. And so that sort of exacerbates the problem with liquidations. Because if you trigger a liquidation in a coin that is, say, half as liquid as Bitcoin is, then it's going to cause the price to go down maybe 1.5 times as much as Bitcoin would for a similar size liquidation, just because you're like basically sending a market order into an order book that has less stuff on it.
Yeah.
And that will cause the price to move by more. So having access to high leverage for altcoins, again, does speed up price discovery and makes it a little clearer and lets people express their opinions about the price more. So it, in theory, can make the price closer to what people actually think it should be. But it does introduce the possibility for these even worse cascading liquidations than Bitcoin has. And that is something that we see. So I think it's not like a clear negative. Like it's not like I think that it's guaranteed to kill alts or whatever. But it does have negatives.
It seems like, even taking leverage out of the equation, now just having an avenue to be able to short sell an alt. I mean, that wasn't really available for a lot of people. Sure, it was available if you were big enough and you go OTC and you had that connection and you understood how that whole system would work. But for the average person, you can't log into Binance and short sell a coin in 2017. Now you can. And I think the idea is people are saying, look, my coin is going to be able to pump. Now people can short it. I was just curious if you agreed with that.
Well, I mean, sure. The other side of that is that it lets people if in general, if you have no access to short selling, then if you didn't buy something, then you have no ability to express the opinion this is overpriced.
Yeah.
Whereas having access to short selling, it gives people who didn't buy it access to that opinion, and obviously people who have that opinion are going to most likely not have already owned it. So yeah, it does prevent these random shit coins from being able to pump way higher than they ought to be. And in theory, yeah, so that I think is net good for the crypto community.
That's actually a good way to think about it. So maybe net bad for the holder who's praying for coin 8,000 on CoinMarketCap to go up, but probably net good for crypto, right?
Yeah, that's what I think.
Okay. I like that. I like that take. Well, I guess we got one thing going for us. There's always going to be kind of never-ending stuff to cover here in crypto. The one thing that I want to end on, Sam, it's not actually one thing. I'm going to pick the top 3 questions from Twitter. So
Cool.
have some fun with these. I think they were pretty good. There was obviously some pretty ridiculous ones we're going to pass on. But if you ask these on Twitter, I did read them all. I just don't think we'll have time to cover them all. One of the first ones was, and I'm glad that this guy brought it up, back on March 12th, it was another really crazy period for Bitcoin. It was a Black Thursday. Not, this week was wild, but not as wild as that. What do you think the possibility of Bitcoin actually going to zero was that day? Right? Kind of what's your opinion on what went down on MEX? I know you don't have an insider view, but it seems like you have usually a pretty good idea of what's going down.
Yeah, so that was quite a day. Yeah, that was actually I hadn't taken a day off in a while, and that was supposed to be the day I took off.
No
I
way.
hadn't taken it like a week. Yeah, and then I looked at my phone and I was like pretty confident that I was misreading the price, but it turned out to be real, so I like ran back in. But
you ran back in
so
instead of running away.
Yeah, I saw that I had some missed calls.
Yeah,
too.
yeah.
Yeah, that was quite a wild day. I think that, yeah, so I mean, the basic effect is sort of the same that we were talking about before. So natural selling got introduced to the system because of the COVID financial meltdown, obviously. Like stocks were all tanking, like S&P was tanking, everything was tanking.
Yeah.
So that introduces, a priori, it was sort of unclear whether Bitcoin was going to go down with everything else.
Mm-hmm.
Because like I've seen papers that like, oh, like in the next crash, Bitcoin is going to be a safe haven asset. Like people are going to, it'll pump when nothing else does. I didn't think that was going to be true, and it turned out not to be. But yeah, so there was some natural selling that got introduced to the system, and that triggered the liquidation cascades, not just on BitMEX, for what it's worth, but BitMEX is sort of what people look at for this effect typically, and it was the most extreme.
Mm-hmm.
So all these levered longs got liquidated over and over again, and there was just no one willing to buy anymore. So the buy side of the order books got wiped out, but there were still these like giant liquidations getting sent, and yeah, it was sort of unclear how low it was going to go. It got like I forget what the actual low was on that day on BitMEX, but below 4, I think.
I think it was close to 36, 38, maybe.
Yeah, it was wild.
Yeah.
In terms of, and so there's like a popular theory going around that BitMEX intentionally introduced downtime in order to stop their liquidation engine from running,
mm-hmm.
And prevent Bitcoin from going to zero. So it's sort of it is possible. There were in order to explain that, they have to have also eaten the liquidations themselves, because there weren't reports of people who should have gotten liquidated who just didn't or whatever, and kept their position even though they were well below the price when they would have gotten liquidated. I don't think that happened, and it's possible they ate liquidations. We'll never actually find that out.
Yeah.
I think that they wouldn't have gone to zero. Or if it did go to zero, it would have come right back up, because obviously there are just because these liquidations existed doesn't mean that people are going to go from thinking Bitcoin's worth $7K one day to thinking it's worth $10 the next day. There will always be people willing to buy it there, and so yeah, I think it's unlikely it would have gotten to zero, just because people anyone who could have gotten money to BitMEX would have bought it way before then. And even if it did, because for what it's worth, there were huge blockchain delays that day. It was taking forever to send collateral anywhere. That also contributed to the problem, because people who knew they were going to get liquidated on BitMEX just couldn't send Bitcoins there fast enough, because the blockchain was taking hours and hours. But they would have eventually sent it there. People would have eventually been able to buy, and they would have. It's not really realistic that it would have gone to zero and stayed there.
So do you think that fear is maybe overblown when people say, look, if BitMEX, we were very close to Bitcoin going to zero, that would have been awful for Bitcoin, right? It was still trading much higher on spot exchanges. Maybe it would have shaken people's faith in BitMEX, not so much in Bitcoin. You think that probably wasn't as important?
Yeah, I think it's definitely true. It could have shaken people's faith in BitMEX. I mean, for what it's worth, I think that would have been unfair insofar as BitMEX's liquidation engine works exactly as advertised. Everyone who uses it like either understands how it works or is like sort of willfully not understanding how it works. And the risks that get introduced by using it are like pretty public. And so I think it would be unfair on some level for people to like see BitMEX's liquidation engine send their Bitcoin perpetual to zero and think, oh, like BitMEX is like this like scam website or whatever, because like it worked exactly as they told you it was going to. But yeah, it probably would have introduced a lot of it would have shaken people about BitMEX and maybe about Bitcoin, but like, I mean, on some level that should have happened anyway. Like Bitcoin did like have cascading liquidations that sent it down like 50% or whatever in a day. That's like if anything should shake people, like that should as well. And Bitcoin's back to 10K now. So
yeah, well, yeah. It came back quick, pretty resilient. All right, number two, someone had a really good one. They said the biggest difference between what Alameda does as a firm, your quant trading desk, I think is probably one of the best ways I can describe it, versus what the individual retail quant trader might try to do. What's kind of the biggest difference strategy-wise with what you guys are doing versus what the average person's doing?
Sure. On some level, the things we do are things that anyone could do. The core of what we do is identify opportunities in the market that like we're using public information to do that. We then back test pretty extensively. We do we're saving a ton of data all the time. Again, which in theory anyone could set up, but having a big team behind you does help with that, especially a team of like really good developers and traders who have experience in like understanding how the exchanges work and coming up with these ideas. But yeah, so we're saving all this data, and we do we run a lot of studies to identify trading opportunities, which sort of isn't like 100% necessary, because like if I have really good intuition, I might just know that something is good without testing it. But it allows our strategies to be a lot more robust, and it allows us to have a lot more confidence about things. And with confidence comes willingness and ability to put a lot of money where our mouth is on some level. But yeah, I think that in that way, the sort of strategies we're doing are really similar to what other people can do. And the advantage, like the thing that's harder to replicate is how many people we have, the wealth of data that we have. We also have great relationships with the exchanges that are like a little hard to replicate. And we also have like a higher capital base than like the average person at home does. And yeah, that can help as well. But yeah, I don't think it's that different on a really base level. Just figuring out what your advantage is. And that'll often come with like, I have some trading insight that like the average person wouldn't. Figuring out how to back test it and then figuring out the best way to put your money into it is the core of what anyone can do, and it's the core of what we do as well.
Sure. I would say, yeah, the framework is probably the same. I'm going to guess that your intuition, your tech stack, and your talent is maybe a little bit higher than the average person.
Yeah, I mean, we like to think so.
Yeah, you guys have done quite well. All right, third one. How quickly, based on that, you're building these robust strategies, but we also have a market that changes from licking both sides all week to a nonstop kind of consistent trend to sometimes we have these flash crashes. How often are you guys having to kind of add something completely new and wipe things clean, or remove something and say this isn't working anymore? Is it a constant iteration, or is it some days you kind of hit a complete change in the market and say, guys, we got to change based on market conditions? How does that work?
Yeah, I would say it's pretty constant. Yeah, we have a lot of tools in place in house to sort of combat that sort of thing. We have automated reports that run all the time to indicate, oh, like this part of the market is different than we're used to. We should think about changing this thing, as well as yes. And for what it's worth, we don't just have our automated bots running all the time without watching them. We have 24/7 human coverage as well. So someone is always watching the trades we're doing, always analyzing the market, and we have like hundreds and hundreds of knobs that humans can push to change the sort of trading that we're doing. And I think that without having that, our trading would just be negative EV.
Really?
And yeah, almost certainly.
There's that much knob turning. Sam said that as well, and he kind of put a lot of emphasis on that. He said, we turn a lot of the knobs, very high kind of human input. The automated systems really just help kind of, we give them a task and they can do it much faster than we can.
Yeah. So there are a lot of things where the human knobs are pretty critical to our success. There are some things that the humans can't do, when our bots are set up to like pick up like ARBs or whatever that
sure
humans could never do because we're trading on hundreds of products. But yeah, the human intuition about this set of four things that sort of popped up today indicates that Bitcoin's likely going to go up in the next minute. Is something that in theory you probably could get a computer to do, but I think that we're nowhere close to being able to do that.
So that the computer helps you find that, and then you still have to be the one that kind of ties it together, and then once again task the computer with, all right, now you know what to do. We're telling you what to do. Go solve it.
Yeah, that's what a lot of our trading is. And for what it's worth, we have like a 10-person-ish trading team, and different people have different focuses. So some people are better at getting the bot to run fully independently about like one specific thing, whereas other people are have like fairly strong intuition about like watching the markets and understanding what things they're seeing mean. It's both kinds of skills are really valuable to us.
Cool. Well, that makes a ton of sense. Sam, I really appreciate you coming on, man. I know you guys probably have your hands full with kind of what's going on. I remember the video that Alameda, I think, first posted. It was pretty hilarious now kind of looking back on. Is Sam, another trader, kind of, no holds barred in what you guys were talking about and giving a ton of access. And it was cool to see kind of a behind the scenes look that you really just don't get access to. And now my listeners also get access to it. I get asked the questions. So I really appreciate you coming on and taking the time to do this, man.
Yeah, thanks for having me. It was a good time.
Yeah, it was good. So as you get back, I'm going to get some sleep. But one last thing, a Twitter user wanted to make sure you guys saw this. They said, can you please tell Sam to let this thing go to 10.5K? I told him that's probably not how it works, but I told him I'd pass along the message anyways.
Yeah, I mean, I'm not against it going to any given price, as long as it happens with the sort of patterns that I can predict. I don't really care.
Exactly. All right, Sam. Thanks for coming on, man. I'm gonna get some sleep and I'll let you get back to work.
Cool. Yeah. It's good talking to you.